My name is Ron Hosen. I've been a value investor for the last 20, 25, 30 years. I am no longer a value investor. I still have the instincts of one, but I don't know how to calculate value anymore. And I don't believe I know what the world is going to look like in an hour. And value investors kind of have to think ahead, because the source of the bargain, the price is only a bargain if you think over time something will happen to get the price up. And that used to be something related to economic value. Probably isn't now. However, what I've decided to do is, I've got 18 jillion videos up already. This is November 15th. I don't know when you'll be seeing this, because I don't have any control over when it's uploaded, but I don't know anything that's not public as of November 15th. And I probably don't know lots of stuff that is, even as of now. So, what I normally do is simply tell you what I'm looking at and what I own, and that usually changes from day to day. But I have a couple of themes, so I'll share them. Since I no longer know what I'm doing, and the superb record that I've compiled over the last 20 years doesn't mean anything anymore. I have no idea what I ought to be doing. So what I decided to do was to pretend that I knew what I was doing, and pretend that the things that I find might be valid in 6 months or a year. So, if you're interested in buying individual stocks, or even individual, say, closed-end funds, then you might listen to these. And then do your own research, because things are not particularly undervalued, and I don't even know whether they are or not, because I don't know. I have no idea what the value is. And neither does anyone else. So, what I decided to look at was stocks that have been sold off because they're they're part of an unpopular group. On the New York Stock Exchange, there are a number of Chinese companies listed. Now, fortunately, apparently a great many Chinese companies are built on fraud, phony advertising, gimmickry. They're not even real businesses. And this has gotten so much publicity recently that I suspect Americans are, and you know, my audience may not be just Americans. In fact, I know of a number of people who have written me who are not American. But the publicity surrounding Chinese companies that purchase shell companies that are American and that have stock exchange listings, but are not real businesses. The Chinese company merges and then gets the place on the exchange. So anyway, Herb Greenberg on CNBC exposes a lot of these. Greenberg's not very smart, but apparently these are so flagrant that he picks them up. But there are a lot of large Chinese companies in very conventional businesses that have been listed in New York for a decade or longer. And they're like, I assume they're like, I don't have any idea, I'll just look at the numbers. But I assume that a Chinese coal company is like an American coal company, except that their stocks are cheaper if you buy them in New York. A Chinese oil company is like an American oil company. And they have websites, and they publish, you know, they put the quarterly reports up, just like American companies do, which indicates, you know, they want Americans to be able to see this. So, these companies are generally, one is China Petroleum, S&P. It has a dividend that's about 3.2 and sells for 7 times current earnings. Now, they could be cooking the books. They have to be audited just like American companies because of their listing in New York. But American companies cook the books too. So, if you wanted a company that paid a decent dividend, it looks like they pay maybe 1% more than an American competitor. And I assume that some of these companies have government help in China. I would rather have the Chinese government on my side. So I'll just give you the symbols and you can check for yourself. All of these have current dividends over 3% and have price earnings ratios from 5 times to 11 times, with the exception of the one I own, which is called, I don't know what it's called, but the symbol is HNP Huang Power. So they build coal-fired power plants. They go up about 1 a week in China. And it pays 6%, and they're having a bad year in earnings, but the predictions for next year are that they'll have about a 10 PE. Now, you know, who knows? It could be completely phony. But you're not going to find American companies in these businesses at a bargain. Okay, S&P China Petroleum, PTR PetroChina, YZC Yanzhou, which I think is a coal company. Coal is very valuable in China. They have to import a lot, and if they can get it domestically, that's important. And they're not concerned whether their people choke on coal dust. HNP mines for coal, produces coal, and produces power plants that burn coal. That's H&P. GSH is Gunshan Rail. It's a branch of a larger railroad in China. It's in the heavily industrialized area. CYD is a truck maker with a very low PE, which tells me that maybe something's wrong with it. CEO, in October, when I decided to jump in after I'd gone to cash and I was licking my wounds from August, I decided to quit. This is no longer my game. I'm senile. And then after I got through with the self-pity, then I got back. And one of them I bought was CEO. And this is an oil and gas producer that sells in China. But they have holdings around the world, including Canada and perhaps the U.S. And their books, what they put up there, looks just like the other companies I follow that are American. Now, it moved up when American oil stocks moved up in October. So it's not a good buy on November 15th. But these things go up and down, and they go up and down a lot. Oil-related, coal-related. These things move around more than other stocks. So, yeah, if it gets down to 150, 160, which is where I bought it, then CEO may be, a good value. It's a producer. You have to be careful about companies that have refining, even if they produce oil, like Chevron. Refining is a real pain in the ass to them, and the businesses they don't really want to be in, but there's no real way to get rid of them. So PetroChina does have refining. So anyway, there are these Chinese stocks. CEO, CYD, GSH, HNP, YZC, which I think I would look at. I mean, that's a coal producer. I like coal producers. PTR and S&P. All right. So much for China. You buy these when they collapse. Now, when the Shanghai market collapses, I suspect Chinese companies in New York that trade in New York probably go down. When the Hong Kong market collapses, then that would be the time to buy these in New York. You could buy them in Hong Kong, but I'm a little suspicious about buying in other currencies. Okay, second group I looked at was my old favorites. Companies, okay, so we're coming in, companies that produce oil, not natural gas. Natural gas, if you're 3 years old, natural gas will be profitable when you're middle-aged. But companies that have large oil reserves and are selling them at pretty good prices. So I'm going to go on to number 2 and give you these companies.